What's up, friends? It's Monday. Keep watching this video because I'm about to do a really cool stock review just for you. Let's dive in. Hey traders from around the world, what's going on? It's your boy Jeremy Alexander Newsome with reallifetrading.com. Listen up, keep watching this video. It very well might be the most comprehensive, elaborate, and important stock review I've done since, like last week. Anyway, a lot to talk about today, and a lot of it's going to have to deal with futures and just kind of the broader market. First off, I want to give a shout out to my main girl, Arabia Johnson, for just rocking it with the group last night. 6 R's in futures last night. I didn't personally make that much, but we did just nail this gap and the analysis. I mean, just being a part of this community, in my opinion, is so valuable. Oh, man. So here's what we got. I'm going to scroll all the way back to Friday night. And Friday night, that's on my Angela, who's actually going to be coming all the way from the western side of Canada to Nashville, Tennessee for the Traders Real Life Trading Meetup in September. She was asking about, the plan, like what's going to happen and what are we going to do. So let me just scroll up to make sure. So this is Sunday. This is the market open. Again, just a lot of great discussion, a lot of great chatter. This is June 28th. I can usually always find these beforehand. I figured just doing it in real time so you can actually see what's going to happen is better. So here it is. Angela, 11:35. And again, just look at the timestamps on these so that you get it. Like this is how active we are. 11:35 Angela, 11:49 a.m. me. And that is on Saturday morning. Here's Pete at 1 a.m. with 2 replies. And again, Saturday, way before the market opens, Angela saying, hey, does anybody got a good trade ideas for Sunday's opening? So Sunday opening, and she's trying to find out what she's going to do and just absolutely crush it, so on and so forth. So my analysis was, if it gaps up, I'll look for a quick long, and then a short, and then a dip buying opportunity at a new low. Now, the cool part is, that is precisely what happened, and man, just pure domination. The cool part is, we've done this before. It's not like this is the first time in the history of the market that something like this has occurred. In fact, this was very, very similar to how some of these days back here on the 20th, June 20th and 21st, how those days kind of played out. Very similar, because this gap up today was a strong gap, and I'm going to share with you a really important lesson in just a few moments, so keep watching. But on the monthly chart, weekly chart, and daily chart, this was a gap. So we're talking a strong gap across the board. And the last time we got a gap like this, weekly, monthly, and daily, was on April 1st. So that was the last time that we got a really nice gap up, and we just ran that day. Now, last night, here was the, I'll go to a 5-minute chart and just scroll back, because I love trading Sunday night open. It's one of my favorite things to do. So on the E-minis, remember I mentioned let's play for a quick long, which we did. So here's the very, very quick long right there. Just snagged really on like the 3 and 2 minute chart. Very mediocre gain, nothing specifically special at all. Some really quick scalping in there. And then we shorted it like heroes. So once, I'll zoom in again. This is the 5-minute chart. No tick charts, nothing special, although you can easily use those to really just crush your trading. You don't have to. So here's the 5-minute candle. This hammer candle is a buying candle, right? So when the very next candle gets taken out, so when this candle closes below the hammer, and remember, the SPY, the E-minis, the S&P is at an all-time high. Never been higher in its entire life. Are people going to be locking in profits? And the answer is yes. People will indeed be locking in profits. They will be selling. So that was the place that we shorted. 72 by 76. 4 points on the short. And then it crushed. We got a great exit down here at around right at 2 R's on the E-minis. That's what most traders did. That's how most of us traded it last night in that futures channel. And again, congrats to all those who had some really good success on that move. John Salvio, Richard, Troy, Jason, Angela, Pete, Hanglao, a few of the traders making some good money. But anyway, that was a really, really good trade. So then, based on the analysis, like, all right, let's look to go long. So your first after it makes a new low, right? That was the analysis, was go long after it makes a new low. So here's the new low, all up in here, getting out of our bearish position and looking for a long trade. Bullish candle, bullish candle. In fact, this is a Marubozu candle pattern. Really, really strong candle. So you're expecting at that point in time to go bullish, right? Huge bullish candle, looking at playing it 66 limit buy, which is here, with a stop at 62. Again, another 4-point stop. And unfortunately, exited this one right before I went to sleep, right around here, which is about 11 o'clock last night, for a small little win. I mean, I say small, overall 2.7 Rs on futures last night, which is killer. 2.7, that's amazing. Last night, Sunday, market hadn't even opened yet. And obviously it could have been much, much, much better if I had held on to it. But I did go to sleep. And usually my plan kind of is like, hey, if I'm profitable, I can lock in a good game before I go to bed. Why not? And I could have just trailed the stop. And what I would have done is I would have taken the stop from here and moved it up to here. So that would have lost about 0.7. That's what I should have done. Didn't. Made the wrong call. Still made money. Not going to sweat it. Okay? That's going to happen all the time. So now let me bring you to the analysis this morning where I just did absolute horrible, kind of horrible analysis. So here's the analysis on the E-minis. This to me looks like a 1, 2, 3, 4, 5. That's what I was thinking was going to happen. And again, I was very confident that the markets would sell off today, but I had to try just in case. So you're welcome to, if anyone wants to mail me some type of like noob status badge, I will proudly wear it because I deserve it today because I did lose on the SPY and then I crushed it. But let's talk about the loss first. So the SPY, again, gapping up, highest that it's ever been. In its entire history, it's never been as high as it was at open this morning. The last time I did something similar, and I do mean the very last time, was right here. This is the exact same type of gap. The exact same. Two small white candles before it with a little bit of an upper shadow, two small white candles, a little bit of an upper shadow, gapping up to an all-time high, gapping up to an all-time high. And the ironic part is I still didn't learn my lesson. So on that day, June 20th, if I go in here to a 5-minute chart, you'll see that it ran up right before market open, trapped some people, and then tanked. So this was, well actually no it wasn't, I'm sorry. It didn't do exactly that. But here was the run up and here's your pre-market lower low. So there's a lower low. First 5-minute candle was bearish. We retest and then we tanked. And that was the day that I was in New York City trading in front of people and one of my mentors, Anne Marie, was shorting the market with futures and so she played it really well. So that's not exactly what happened on this instance, which is today. It's pretty close though. So this is today's chart and you already know what I'm about to say. And yes, I did it. I had to do it. That was my plan. My plan from this weekend was, yes, the SPY is up big. But boy, oh boy, I mean, it's up 1%. A lot of people could be squeezed out of here. The shorts who are trying to cause this market to roll over could get squeezed out. And even though we're gapping up 1%, we could go up even higher. Because again, it's gapping on a daily chart, weekly chart, monthly chart, first of the month, just an incredible gap. So how do you think I played this move on SPY? The answer is, yep, right there. That's where I went long. Because, and Jeremy, why would you ever do that? Well, again, back to that analysis was, if I see the candle, I'm going to take the trade. Even though my brain's like, hey man, don't do this trade, you're going to lose money. Guess what? Your brain is probably always, forever and ever going to say that. What is your worst case scenario when you take a trade? You better know the answer to that. It should be your 1R, your one risk unit. That is how much money you should lose on any given trade. And you should always know that number. And you should always know how to calculate that number. That's worst case scenario. That's it. So going long right here at the exact highest that the SPY has ever been was absolutely dumb, but I did it. And I had a stop right here, which was also very dumb. Well, not really. Never dumb to have a stop, right? But it feels dumb when you get stopped out and you lose. Now, here's the good news. When I am looking for a trap, how do I identify what a trap is? And I identify a trap with wicks. I've talked about this numerous times, and I finally got a chance to do it, watch it, trade it, and record the whole thing, and we absolutely murdered it, and it felt great. This was a perfect trap on the SPY. Wonderful setup, high wave candle, inside candle, and then bloop, just trapped me with a little bit of an upper shadow. So it was a wick that got me into this trade. It flashed me in by pennies. Also, the highs of these candles were the exact same. 29688, 29688. So again, if you're calling me crazy for buying at the all-time high, you should. And again, if you want to mail me some type of noob badge to wear, I will wear it proudly. But we lost on the trade. Now, here's where the good news comes in. When I notice that I'm in a trap, and I get trapped because of that wick, obviously once this candle comes in and once this candle comes in, I was in a trap. What do? I start planning for the future. I ask myself, okay, what am I going to do now? And this is what we did. We bought puts, and we made a lot of money. Now I'm going to show you another loss that I took today. And the good news is both of those losses we made up for on this put trade. So I feel really good about today's performance, realistically. Here's the trade setup that we did. This is a 5-minute chart. High wave candle came in. So there's the high wave candle. We bought some puts when it broke down, and we had the stop at 47 cents. That was it. Now, the 47-cent stop did not correspond with this stock price, right? 296.47. The 47-cent option price was actually the high of the day. So the previous high of the day for the 296.50 puts was 48 cents. So 48 cents was the previous high, so I put my stop at 47. So when I drew this, it wasn't totally corresponding because it was going kind of fast. So I ended up saying, all right, guys, this is where the stop needs to be, is up here. 47 cents, which is a 40-cent risk. So let's do the math. $500 R divided by 40 cents. I'm going to draw that zero a little bit better. 500 divided by 40. So if you're like, how many contracts is that? This is the answer right here in front of your face. 500 divided by 40 equals 1,250 contracts. That's a joke. It's a lot of contracts. That's how many contracts you would have bought. That's how many shares you would buy. So that would have been 12 or 13 contracts. Went with 13, rounded up, and it was a good decision. That was pretty much it. So I got wicked out. I realized I bought the all-time high. It happened with an upper shadow. Okay, very next candle gave me all the information I needed. I got stopped out within like 6 minutes on 2 bullish trades and had to flip. The unfortunate news is today we were also trading AMD, and I missed AMD by pennies, and then I canceled it, and that canceled trade actually would have worked out great, but that's okay. Again, live the trade another day. Original entry was here on AMD, and the stop loss was up here, right below the low of this 3-minute candle. So when this trade missed me getting filled by an entire nickel, I canceled the trade. It rolled lower, it made it another high, would have filled, and just absolutely dive bombed from there. Would have been an amazing, amazing trade on AMD had I left it open, but it's okay. I did not leave it open, not a big deal. But I was very, very confident that AMD was going to fade today, especially with the look of this pre-market data. I mean, this pre-market data, look at this. Brand new pre-market resistance, just a little bit of a flash higher, just enough to trap everyone going long, and then it tanked. Why did it tank? Well, again, it was a gap and go. I agree. A very, very bullish gap. But the last few gap and goes, aka this day and this day, were both not awesome gaps. They both didn't really do anything tremendous on that day. So I back traded both of those days before the market opened and was like, yep, I think, ladies and gentlemen, that AMD is going to have a little bit of a free fall this morning. Now, as far as the trend is concerned, I love the trend. There's market close. The trend looks great. So here's the double bottom on AMD. Here's a little bit of a retest, and I do think AMD can easily continue to peel higher. But that was the trade. And this morning, we were doing an experiment. So the experiment was we were only looking at these 3 stocks all day today, and all day tomorrow. And that's because the market's closed. Market closes at 1 p.m. Eastern on Wednesday, closes all day on Thursday, and it's open on Friday, but should be slow volume question mark. So RLT is closed Wednesday, Thursday, Friday. Now I'll be doing a lot of coaching sessions and phone calls and emails and videos and helping people with stuff, but I won't be doing a stock review on Wednesday or Friday. And I'll be doing I'll get all caught up with your requests and everything next week. But RLT is closed Wednesday, Thursday, Friday, so all those traders in the trading room, don't be there. We won't be there because the market won't be there either. And other than that, so tomorrow we'll be focusing on SPY, Square, and AMD again. Just watching those three. Now, I mentioned Square. Let me go show you how I traded Square today. And also lost on Square. But again, really, really good trading on those puts to bring me profitable for the day. So held those things like a mouse. Could have held them even longer. Obviously, in hindsight, should have. I'll show you how this would change if I had exited everything here. So if we had just exited everything at this price, so instead of exiting these, 215, 500, how come that math didn't work? I thought it would just automatically calculate. I think I did something wrong. Sorry, I thought it was gonna be all cool for a second. Like, watch me do calculus. Why did that not work? That's weird. Okay, so I delete that, it just takes everything off. Okay, so let me do it this way, and we'll come back. So number of shares, it's the first price, I see. So 215, 500, that would have been the result, up 3.2 Rs for the day if I hadn't tinkered with it at all. So if I didn't tinker with it at all, would have been actually a little bit of a bigger gain. But again, I know that's in hindsight. Hindsight's really cool. So we did exit some partials. Okay, so we exited a little bit at 101, we exited a little bit at 113, and we exited the rest, at 215. And again, for a 2.66 R win, up on the day, even after the loss. So let me show you the loss on Square. God, it was ugly. Boy, oh boy, it was rough. So Square, I do love the trade long term, still love the gap. I want to give a shout out to William, who did end up playing Square and winning on it earlier in the day. But here's the 5-minute chart. And so we did not take that trade. And again, this is actually, I was pretty pleased on this trade, even though it didn't work. That's totally fine. So here's the 3-minute time frame. And the 3-minute time frame, you had a high wave candle on the first 3 minutes. So I should have just had my entry here and my stop there. That's what I should have done. But I tried to get a little fancy and tried to enter here with a stop loss right there. And got smoked. So again, both bullish trades, I was down 2R in the first 15 minutes of the day and then had to flip my perspective, go bearish, do my absolute best to lose small, and get all of those gains back. It's not easy to do, but it can be done. And shout outs to Will for going bullish on Square right here with the stop somewhere down there, exiting some of his position and then getting trailed out up here for about 0.8 Rs. That is a beautiful setup on Square. Very, very pretty. But anyway, excited to see what we do on Square, AMD, and SPY again tomorrow. Now, let me go look at some of the stocks that you all requested, and I hope that information was beneficial. Kodak Sciences, ticker symbol KOD. Kodak today, had a trader ask yesterday or the other day, is this the S-curve on Kodak? And as surprising as it is, the answer is yes. That was indeed the S-curve. Beautiful pullback to the 20. You had 1, 2, 3, 4 bearish candles in a row. So just a really makes sense that some buying was going to come in at some point on that particular pattern. Volumes coming in. Kodak coming back from the dead. Kodak Sciences. You can see breaking out of this resistance. So right now, some volume looks good. I would, if you're playing Kodak, probably look to buy a dip on this one at some point. I'm trying to figure out the wave count. I mean, 1, 2, 3, 4, 5. Makes sense, I guess. Not the greatest count in the world, but I could make it work. Again, the weekly chart. This could also be a 1, 2. All of this is a 3. Then we get a 4, then we get a 5. But anyway, Kodak, I'm not going to personally trade this one. I don't think the fundamentals are incredibly amazing on Kodak anymore. But, you know, buy the dip. The trend is bullish. I get it. Had a few people request Maxar Technologies, and this was a stock trade that we got into early in mid-June. We took it actually 2 times. So we took it in May and got out of it in June. So we got in bullish here, held through all of this, and got out here for a very small win. Then we got back in once it formed this Morningstar reversal, followed by a tweezer top. Once it broke out of that candle, I simply said, okay, I'm just going to buy it at the low, at the high of that bearish candle. That was it. So just buy it at the high of that candle. High of that candle, 644. Limit buy was 643. Low of the day was 640. Holla at your boy. We got filled on that trade. And then we exited Maxar Technologies just to lock in a gain before July came. We exited sometime over here. And realistically, the trend is still going. So I think Julian is in this trade. There's a few other traders, real life traders in on Maxar Technologies still. Daily chart looks really good, but what I like the most about this one is the weekly chart. Weekly time frame, you're starting to break out. Some volume looks really, really good. Keep your eyes on this level because since it is just Monday today, and we start breaking out above the high of today's candle specifically, look to go long. I mean, you're welcome to buy a dip, but if we trade sideways and take out the high of this candle, Maxar Technologies realistically could move and move very nicely. So that's definitely one to watch. Salesforce, ticker symbol CRM, bouncing very nicely off of the 200 simple moving average. We talked about this one the other day, and a few traders in Salesforce for the longer term move. Weekly chart looks pretty good. 15-minute chart actually held up well most of the day. So Salesforce, and this is the 15-minute chart, pulled right into the 10 EMA on the 15. Beautiful high wave candle, gorgeous entry down there if you played it. And then here's another very nice high wave candle there with a deliciously delectable inside candle, followed by another high wave candle right there. So if you were playing it, which I didn't, right? We only focus on 3 stocks today, but if you were to play it, entry would have been right above the high of that candle. Stop would have been below the low of that candle. You probably would have exited right towards the end of market close for an R on Salesforce. So nice little afternoon play. This one held up pretty well most of the day, and keep your eyes on this one. I mean, this is a nice hammer-ish candle. So if we gap up again on Salesforce and start running, I mean, let's ride. There were so many stocks. This stock review could be like 4 hours long. In fact, I'll be doing another stock review for all my paying subscribers in 52 minutes, and it will be an hour long, and it'll be incredible. Let's go look at 4 more. Had a request for CrowdStrike, CRWD, and CrowdStrike down nicely today. It did have a good gap yesterday being Friday. So this is a little bit of a lower shadow on CrowdStrike. I would come into an hourly chart and watch this for a double bottom. There's a few places that this thing could bounce, and the reason I'm saying it could bounce down here, well, I mean, anything is possible at any particular price, right? But it's done it before. Boom, shaka, laka. So if we break above this high, right around here, 65 and some change, that could be a long with a stop loss right down there. And then again, if CrowdStrike does roll over and break down, then you would most likely just be bearish and expect this IPO to do what a lot of tech IPOs do, which is slowly and ever so quietly creep lower. That's what it looks like it's going to do with some kind of crazy version of a rest after battle pattern. So if for any reason it gaps down, opens down, or breaks below these lows, CrowdStrike will be making new IPO lows very soon. And if it doesn't, go bullish. ZYNE, pharmaceuticals, weekly chart, strong. I don't personally play pharmaceuticals, but there is a lot of volume coming in on this one. And here's the trends. Looks good. Breaking out of the trend, volume obviously rampant. You got to gap up on a weekly chart, and you got to gap up on a monthly chart. So make sure to be looking at those monthly candles, ladies and gentlemen. So the hourly time frame, I would just buy the dip on this. Looks good. If I was trading this one, I'd buy it at 1361 with the stop down here at 1226, something like that. Entry there, stop there, a little bit of a pullback in the dip buy on ZYNE. And the other two that were requested, here's eBay, EBAY. I haven't looked at eBay in a while. Woo, weekly chart, putting in work. Look at this unfilled gap right here. Retest gap too. It did retest. Then you got an inside candle the very next week, and then you got a, whoa, look at that gap. Oh boy. Great gap on a Monday on eBay, February 4th. Brilliant gap, gorgeous trend. And to me, this just looks like a trend that's going to continue. You have an inside week already this week. So that tells me that eBay could move. In fact, earnings are a few weeks away. Very nice little gap on eBay. And if I were trading this one personally, which I'm not, just because, you know, can't be in everything. But if I were, I'd just bracket trade this candle. In above it, stop below it. The trend looks good. Obviously, you would have preferred to have gotten in on the pullback previously. So you'd have really wanted to get in on that pullback somewhere over here on these days, just buying off of a previous resistance. So previous resistances with that wick, this candle, and that would have been a buy the bounce right into the 10. So going along there with the stop loss down there, you're already rewarded handsomely. If you want to sell before earnings, that makes the most sense to me. I have no idea what earnings will do, but I do know that earnings season will be right in the middle of the free open house week for real life trading. Those links will be going out again later this week, so keep your eyes peeled for that. And last but not least is Shake Shack. And Shake Shack working on a breakout. So it did make a new new 52-week high recently. My buddy Yates, who bought into this position and was trading this position and doing very, very well, he let me know that he sold some 65 July puts and some 60 puts for August. Now keep in mind, Yates had some covered calls on this position. He got called away at 70 and made double R's, multiple dozens of R's, not even kidding. Held this trade, has been this trade for a while, and just absolutely crushed it. Finally got called away at 70 on a covered call this past Friday, and is looking to getting back into shares. So Yates, 65, so he's selling some put sales, trying to get back into some shares, July, Yates. And for me, if I was playing Shake Shack, I would look to get in at the high of this weekly candle, 67.02, right below there. So about 66.14, I think it looks good if it can pull back to that level. You have a high, massive volume candle coming in Friday, bearish engulfing candle coming in today, totally engulfing the previous day's candle. So, if it trades down, I would look for a little bit of a dip buy into here. Again, around that 65, 63 level, that's where Yates is totally happy to own shares anyway. So buy the dip on this one, but the trend does look nice and bullish. Ladies and gentlemen, the free week is approaching. I hope a lot of you have the opportunity to take advantage of that. Take off school, take off work, call your kids, call your wife, call everybody. Real life trading, the next free week will be in 2020. Keep your eyes on the inbox. I'll send links. Otherwise, ladies and gentlemen from around the world, thank you for watching this free Monday real life stock review, and I will see you all again on the 8th of July. And until then, love life, live life, and trade it.